looking at a near 200-point gain for the Dow on renewed optimism about tax reform. It was the best one-day gain for the indexes in over a week. Let's bring in Paul Dietrich now, CEO and Chief Investment Officer at Fairfax Global Markets. He joins us live from New York. Paul, good to see you, sir. So is this another false dawn when you consider the price action on Tuesday's market, or does this rally have legs?
I think this rally has legs. We are going to get corporate tax reform eventually, but there will be some kabuki theater that investors have got to watch for a while. And the reason for that is that Paul Ryan, who's the Speaker of the House, he wants to get a comprehensive tax reform, lowering marginal tax rates for both individuals and for corporations. The problem is they would need Democratic votes in the Senate in order to get that passed. They need 60 votes. A lot of people do not believe that the Democrats want to get individual tax reform because they think that's giving money to the rich. However, the plan B is that then they will put up a pure corporate tax reform bill. A lot of Democrats will support that because they know that a 35% marginal tax rate, the highest corporate tax rate in the developed world, is just crazy, and it's driving businesses out of America. Trade unions are in favor of lowering those taxes. So I think that eventually we will get corporate tax reform, but we may not get individual tax reform.
I agree with you. A lot of this kabuki theatre, as you put it, Paul, is just that, is just political noise. And the markets so far have done a fairly reasonably good job of taking it out. But it does mean policy paralysis, doesn't it? It does mean that corporates are going to find it very difficult to plan ahead, especially if the tax regime is not clear.
Well, Reuters today came out with a lead story this afternoon, basically saying that they're now down to a very few conflicts that they're trying to resolve in terms of corporate tax reform. So we should know probably in the early fall what the elements are of that corporate tax reform. But I'll tell you, the thing that's going to change for investors is that we're going to have a once-in-30-year restructuring of the stock market, because there are some companies like, say, Microsoft and IBM that pay 5 to 7% marginal tax rates because they keep a lot of their money offshore. Part of the tax reform is that all that money is going to be brought back into the United States at a 10% tax rate, and then after that it will go up to the 15 or 20% tax rate in the future. Those companies, global companies, are going to be paying more taxes, and that's going to be a hit to their earnings. Companies that are mainly U.S.-centric and get most of their earnings in the United States and are paying the 35% marginal tax rate, right, they're going to have a massive cut in taxes, and that's going to go directly to their earnings.
So it's dividing corporate America. And let me just pick up on that theme of earnings, Paul. What did it tell you? What did the earnings season tell you? And does it tell you that you need to be in those multinational companies that have international exposure because the dollar is so weak and that's working in their favor?
No, I think it's just the opposite. You're going to be wanting to be in companies that get most of their income from the United States because they're paying the highest corporate taxes. You take a company like Verizon. It's selling at a 12.4 price-earnings ratio. It has about a 10% annual earnings right now under the current tax structure, but it's paying 35%. If that 35% is reduced to 15 or 20%, they're going to get a 15 to 20% boost over their already existing 10%. So they're going to have like 25, 30% earnings. And that means their price-earnings ratio is going to go down to about 4 or 5. Well, that's just crazy for one of the biggest telecom companies in the United States.
Okay.
Those companies, they're going to go crazy in terms of people switching from multinationals that are paying lower taxes to these companies that will be, they're going to get a real benefit from this tax cut.
So in the medium term, if the big cap techs are going to be paying a higher tax rate, after all said and done, do we reduce exposure to them, especially at these lofty valuations, Paul?
Yeah, the answer is yes, and I think it's already happening. You're already starting to see a movement away from the kind of big global tech stocks and other global stocks to these stocks that are going to be major beneficiaries from this tax reform. This is a once-in-a-30-year event, and analysts now, and I think you'll really start seeing it once the actual tax proposal is on the table, and analysts can actually make informed judgments as how it's going to affect every company. But this is something that we haven't seen since 1986, this kind of restructuring of all the companies based on earnings in the U.S. stock market. And people have got to pay attention to this because this will affect their stocks.
Agreed. Can I bring you back to the Fed? Because they seem to be in the driving seat right now, Paul. What sort of tone do you think Fed Chair Janet Yellen will strike on Friday during her speech in Jackson Hole? And what will it mean for markets?
Well, I don't think it's going to have much effect. I think she's going to be cautious. I do believe there will probably be one more 25 basis point hike this year. That's already kind of, I think, cooked into the market. We have almost no inflation. The global economy is doing well as the U.S. economy. The Atlanta Federal Reserve came out today. They have something called GDP Go, and they're projecting 3.8% growth for the third quarter of this year, and that's way above everyone else's estimates. If that happens, we haven't had that kind of GDP growth in the United States since 2014. So I think she's going to be very cautious.
Paul, we'll leave it there, sir. Pleasure always. Thank you very much indeed for your time today. Paul Dietrich there, CEO and Chief Investment Officer at Fairfax Global Markets. Right, Macy's shares are rising sharply.